All right, all right, all right. Good morning, everybody. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Choke Fulkerson. Hope you guys are all getting ready to roll on a beautiful Friday morning. We are yesterday after one heck of a sell-off in which we saw some fairly large market movements. Stopped out most of our longs yesterday, which we talked about in the update. And so today we're going to talk about what are the opportunities going into the weekend. And we know the rules heading into a weekend, right? There's an opportunity in weekend for gaps. And so those gaps are something that we need to make sure that we are aware of. So let's go ahead and take a look at today's opportunities. One thing I want to share with y'all right quick. Let me shrink that down. If you have not already registered, make sure that you do. Go to tradersarmy.com/Trader Summit. Sign up for the Trader Summit today. We've got some great presenters. Myself, Corey Lane, Justin Krebs. Herman Casas is going to be talking about cryptocurrencies. Ryan Miller is going to talk as a performance cult. Lex Lutheringhausen is going to talk as an options expert. And then Jim Cagnina is going to talk about futures and how to utilize index futures in today's market. So it's going to be a pretty cool day. I'm excited for it. Remember, these days are they are completely educational days. They are not giant sales pitches. I think a lot of people, when they come into something like this, they anticipate a big old sales pitch, and that is just not the case. It's going to be a fully educational day. So I look forward to having you all there. Okay. So let's go ahead and dive into today's markets. So yesterday we sold off pretty hard. And in yesterday's market where we sold off pretty hard, we had, we had a couple of demand areas that just got blown right through. I mean, absolutely got blown right through like the proverbial knife through butter. However, in the Russell and the S&P and the NASDAQ and the S&P, all of them, although the Russell being the cleanest, the areas that we had marked off as demand zones. So like, for example, this area here was marked off as a demand zone yesterday in the live trade room. And by the way, the level failed. Those are just going to happen. But we talk a lot about flip and reversal level. So one of the things that we put into yesterday's trade update at the website was anticipate a flip coming from this entry in the Russell. And so I'm not sure if any of you were able to catch the flip trade as it came back down, but that's really was the best trade of the day, was identifying that we had a flip trade set up. So in all of these markets, I need to remove these levels because the flip trade worked out extremely well, but that means that supply level has already been used up, right? So I need to go through and remove these areas as we got stopped out. So let's take a look at our next levels and our next areas of opportunity where we're going to find our better trades. Well, on our 4-hour chart, our 4-hour trend was decidedly down. Then all of a sudden we're like, hey, let's get higher than this prior high. Oh, wait, kapowie, came right back down. And so I think that overall we're probably a bit more bearish right now than we are bullish, but we're basing here in front of this 15-minute level. Well, that should give us a real quick clue as to what that switches to, right? So basing there in front of that level tells us that it's a potential for a breakdown level, provided that we get basing in that level. Jersey Trader in the ES short from the 30-minute level at 38.32. Nice. So you've picked up about 10 points of move on that. That's a pretty good little trade off of that level. If you want to get short below this 3,800 on a breakdown, I think you do have an opportunity there. Now, I will say that there is a potential for a bit of a trap level based upon this area of demand down below us. Not that one. Right below 3,800. There we go. Based upon this demand level. So there is a potential for a trap. I don't think we're going to see the trap, but it is a potential, and something could happen in that region for a potential reversal as price comes back down in. But my gut tells me that if we continue to base here, the further move is for price to continue to head down. Now, Where did this all come from yesterday? This all came from the Fed coming out and saying, "Hey, listen, we know that we're going to have to do something eventually, but we're not going to intervene too much and more than we are until the economy tells us to do so. But we're going to continue to stimulate as the economy tells us to do it." But they didn't talk about how they're going to adjust any of the rates. And so what we want to look at is, how does it impact the market, right? How does it impact the market? Well, the market did not like that at all. Sold off pretty hard in all of our markets, although the NASDAQ sold off the most, right? The NASDAQ is the one that sold off the most and had the greatest weakness. So I think the S&P, a breakdown is very much in order. If I look for a reversal above me, I think that area that you got in, Afan, is probably a pretty good little level. Good morning, Amit. Welcome. But I would look for basing right in here, and then for price to break below that level. That, I think, is your best opportunity. As far as reversals, I don't see a great reversal until we come all the way up here. And even that is a bit questionable, right? And that's a bit questionable because of this long wick up right here. This is really just a retest to that level. So nothing that's exciting me on those. Now, on the on the NASDAQ, on the 15-minute, we do still have this pivot right here. Okay, so this pivot right here does still exist inside of the NASDAQ for a decent reversal on the small time frame. If price makes it to that region. I'm going to go to the 4-hour. When I look at the 4-hour, I mean, there's definitely a strong rollover effect that we see here. Let me take a look at this on the daily right quick. Sitting right about here on the daily is a fairly decent area of support. So we could still come down a little bit more. I'm not ready to change, by the way, my overall bullish bias, because, I mean, we're only less than 200 points off of, or I'm sorry, 1,200 points off of that high, from that 13.9 down to 12.8. So it's not a huge pullback. It's a nice pullback. It's a healthy pullback, but it's a pullback from here to here of 10%. So we've had about a 10% pullback in the last few days. That's actually a really healthy pullback for these markets in a daily chart. If we look here, we had one last year that was about 13%. We had another one that was about 10%. I mean, we get these good, healthy pullbacks, and they typically become opportunities to get long and take the next ride higher. And how long does it do that? It does that until it stops. I mean, I'd love to give you a better answer, but it's going to do that until all of a sudden our weekly levels start breaking. And that really hasn't happened since the beginning of COVID, right? So if I go to a weekly chart on the NQ, right, here was the drop from the beginning of the COVID markets, and that was, a 20% correction, and that's what we've seen since, right? Now, by the way, that's nearly an unsustainable rally to go that long. I mean, if we look at this and we go back 10 years on a weekly, it's by far our largest and most unsustainable rally. So it would tell me, logically, that we would get a deep pullback at some point, at least down to 10,000. However, until we break demand levels on the weekly chart, we don't really have that. And so I've got a little bit of demand here that I think is worth considering. My point being is that I'm still going to be a bigger picture bull until proven otherwise. Okay? Now, one thing that you can certainly do is you can take a look at the 8 and the 20 period moving average. We talk about the 8 and the 20 from an investor standpoint. And I know that normally in the DMC we talk about short-term trading, but this is more of the investor style, investor mindset. We talk about, okay, we get out when price gets below the 20, and we get back in when it comes back up above the 8. We're below the 8, but we still not come below the 20, right? We're still above the 20, and we've come below the 8, but we're still above the 20. Now, why is that important? It's a very simple rule, but essentially what it says is When price crosses below that 20, you get out of your bullishness position, and then you get back in when price comes back up above the 8. And it's nothing's nothing's fail safe, and it's always going to get you out too late and get you in too late. But from an investor standpoint, it's a trigger that you can use for protections. Okay? Peter says frozen. Is anybody else frozen? Anybody else frozen? Can you all hear me okay? Type in the chat box, but there's a delay, so I won't know I won't know it for a few seconds anyway. All right. In the Russell, we have an area that was a breakout line that price broke above there. Old resistance then acted as new support. So old resistance acted as new support, and price came right back into this level, and we got a bit of a bounce off of that level yesterday. So where's our next level? Well, I think that level is still intact. I think that this is an old resistance becomes new support picture, and one that we bounced off of that level. Okay, thank you for all answering me. That's how long the delay is, by the way. When you typed it in, I'm just now reading Liz's nope and Rag Sparks all good here. So that'll give you an idea of how long the delay is from when you type and when I see it. All right. So when price gets below that 2160 with some basing, then I think you've got room for price to continue to move down. As far as the drop that we've seen in the Russell drop has been nowhere near as strong as the Dow, as the S&P and the Dow and the NASDAQ. Matter of fact, it's down 5, maybe 6% instead of 10% that we've seen in the NASDAQ. But on a breakdown, I think that's your breakdown line. And by the way, that was a breakout to the upside, which a lot of you were able to take and make some profit off of. So why not take the breakout to the downside if the market gives us to us? Now, I will say that of all the supply zones in all the world, you had to walk into mine. That level I really like. Okay? That's a really, really good one. That level in there. All right. And then the Dow Jones, the dang Dow Jones. We had the breakout above. We got to a new all-time high, and then that son of a gun just came screaming right back down. I'm okay if you want to take a breakdown below this area here as we're basing in front of it. Give yourself a stop that's above this pivot. You still got to give yourself a stop above the prior pivot, but that would be where your breakout would be on the YM. All right, let me share this grid. All right. Commodities. Let's do energies and metals. So taking a look at crude oil. Now, we had a couple of demand levels here in crude oil yesterday. And in the overnight, and we kind of had wrapped some lines around these areas. Armand was teaching class yesterday, and he looked at a couple of these levels in here and at the strength of some of these levels. Well, what happened in front of these levels? Anybody see what happened? Kiss of death, right? The kiss of death occurred before these levels. So, yeah, you're right, Dennis. That's a good point. The Dow did try to break out by itself. Dad can't make decisions. Dad can't make decisions alone. He's got to take the rest of the family into account. So crude oil basing in front of that level, there is still a decent 15-minute demand area down here at 61. I'm still, once again, just like everything else, I'm still more longer-term bull in crude oil. And so I think that anything is just a pullback with an opportunity to get long, although our momentum may be slowing just a smidgen. If we come back up, you actually do have a really decent supply area up here for a potential reversal. And I would say it's just the pivot area at this point. But if that breaks through, then look for that to be a flip. Okay? So as it stands right now, our 4-hour trend is still very much up. So that has to be a confirmation level entry anyway. And if this breaks through, then look at it to be a flip area for a long opportunity coming back. And that should kind of be a standard, right? If one of your levels gets broken, don't fret over it. Look for it to become a flip. Hopefully, yesterday, there were a fair amount of stop outs in crude oil. I'm sorry, not crude oil, in the equities markets, but you were able to take the flip and ride it back down and make more, a little bit more than that. I trust the Traders Army CCI more than the moving averages. Yeah, they are still above 100. Um, and so, that CCI is really an interesting indicator when it's set to 100. I mean, that's the indication of that 100 on the set. Now, gold yesterday, we did get a decent move down in gold off of this little 1 hour supply area. Price did come back up into this level, and that should have been off of this 15-minute zone. Price did come back in and give us an entry before then moving down to the next level. We moved down to the next level, which was the target off of this area, and base, telling us, okay, this level's probably not going to work, before then continuing to break down lower. So now when I look at this on a 4 hour, we're still going to continue our short bias overall. Short bias does still continue. The question is, where in the world do I get back in? Right? Where in the world do I get back into this thing, and how do I re-engage the trend? Well, let's look right here for a potential breakdown. I think that's probably the best way to get in and re-engage the trend. Kind of like what we've seen in copper, except, just the opposite over the last few weeks, that you're better off getting in on the breakdown because the retests don't always come to the supply areas above, or in copper's case, the demand areas below. Let's see. Jersey Trader says CL 6160 by 6130 is a good pullback demand zone. Yeah, that's similar to the area that I've got identified. Um, in this area, I've got 6150 because I took the 15-minute level. If you take the wider zone on the hourly chart, then you've got a much bigger zone. But yeah, and I think 60 is an important price point, Dennis. I agree with that. Let's see, Jasmine. I'm so sorry to ask you this, but I'm very confused about the relationship between the bond and the stock market. Could you please help me understand a little bit more about this? Thank you so much. Let's talk. We'll talk about that when I get to bonds. Let's talk about that when I get to bonds as we get there. And because a lot of times people think that bonds and stocks are inverse related, and that is not always the case. Okay, Nat Gas. So Nat Gas yesterday, we had a little area that we thought made a decent area for a breakdown. We got an overnight pop below that level. 1, 2, 3, 4, 5, 6 candles later, it had gone kind of nowhere. So if you move a stop on this to break even, you're probably stopped out of that position. If not, and you're still in it, at the very least, your stop should be a break even now. So the breakdown itself wound up being okay, not great. Now, I will say that there are still some of you, nudge, nudge, wink, wink, hint, hint. There are still some of you that are short from the gap down, right? Some of you are still short from the gap down because the trade was a gap and go. So those of you that are still short from the gap and go, hip, hip, hooray. That thing's still running. Oftentimes, the gap and go trade will last for multiple days. And that's what we've seen here, is that this thing's just continued to run on the gap and go. So for those of you that held the gap and go trade in Nat Gas, that has moved down pretty much all week, giving you an opportunity for a long-running winner. Now, where do I get back in? Well, as gas prices are falling here a bit, we saw a bit of a spike here during the cold snap. Where's our next kind of move down? Well, I think that our breakdown trade was a decent setup, but as far as a reversal trade, looking at this, are any of these quality areas of supply that you want to lean on? Not for me. Nothing there that I want to lean on from a true reversal standpoint. My closest one's this gap area up here. All right. So, by the way, keep an eye on this on Sunday night for another gap and go opportunity. We will have class again on Sunday night. And now copper. So copper, we had talked about a breakout trade here. That breakout worked really well. What was funny is that yesterday in class, Armand talked about, listen, it looks like a bit of a topping pattern could be forming. And so if you really want to go against the trend, you can take a short on a breakdown below here. Happened. The big move up just blew right through. Now, I will tell you that this thing has gone essentially parabolic for the past few days, few weeks. Straight up move. This pullback is in no way a shock or a surprise. And our next area of demand, let's see if it gets tested down here. Now, our 4-hour trend is technically still up. I don't have a lower swing low yet. Okay. But I will. I'll look to see if price comes back down into here. So a Fongo question that I want to make sure I answer. He types in the chat window, is today the last DMC on YouTube? Today is the last live daily market commentary done at 7 a.m. in the way that we've been doing them. I'm going to go back to a recorded version on the web, and we've added more live trade rooms to Traders Army. So now instead of having 3 days a week. What's funny is when we started Traders Army, we had 2 days a week. We had Sunday night and Thursday morning. That's all we had. We started Sunday nights and Thursday mornings is all that we had. And some of you were around for the very beginning of that. But starting on March the 1st, which is Monday, we're going to have every Sunday night. We're going to have Monday morning, Wednesday morning, and Friday mornings are going to be the live active income trade rooms. And then Tuesdays are going to be the active trading passive income, so the options session. And then Thursdays is going to be the strategic trader room. It's going to be more swing trading of equity markets, so stock positions. So that's really going to change. So starting on Monday, we go to essentially 6 days a week. So, well, listen, Lee, my voice isn't going away in the morning. It's just not going to be live every day. I'm still gonna put out a video every day. So don't worry, Lee. You'll still see my sultry voice and my big old bean. It'll just be a slightly shorter video. And what I tell people is that the daily market commentary was never designed to be a live futures trading room. It was really designed as a way to kickstart your day, and frankly, for people to get to see what we do at Traders Army and see, hey, this might be something that I want to learn more about. And what it's turned into is an extra live trade room. So I just thought, let's just put the live trade room in there. So, yes, Peter, I will still share the grid from the recordings of our levels. So, all right. So let me share this. Speaking of sharing the grid. All right, so let's go take a look at Ags. Now, Ags yesterday, holy shnikey, they came. Isn't there a song about the walls come tumbling down, because they came tumbling down hard. We saw the Ags really get us a big sell off. It was a steep drop, and frankly, one that was very shocking. I did not anticipate that. It was like I felt like Ron Burgundy and Anchorman saying, "Well, that escalated quickly." As it just sold off right away. So in looking at it now on the 4-hour, we're in a fairly sideways trend anyway, but my most recent momentum is pretty weak. So if this demand area holds, which I don't know how long that's going to hold or what it's going to hold for, it'd be interesting to see if it makes it back up to here for a potential reversal. Now, we've already got one touch there. That's our pit close. We've already got one touch there. So it'd have to be confirmation. But that, to me, looks like a really clean entry. I also, frankly, like this area here. Here's a wick over wick. Your stop goes above this wick in here. Corn, similar picture. Corn's actually sitting above a potential kind of breakdown area. It's not a clean breakdown area, though, in corn. Not the cleanest. But your reversal area up here is pretty good. And then in wheat, same thing. We broke up, stayed up there for a little while, and then the market just laughed at it, laughed in our faces, laughed in our proverbial faces. And then we had this move right in here. And then last was bean oil. Bean oil actually does have a good demand area below us. It's been a little bit doesn't run with the rest of the bulls in the pack, and it's actually still in an upward trend. Hasn't really changed. All right, let me share this one out. Next would be bonds and currencies, numero uno. One second here. All right, so looking here at bonds. So yesterday in the bonds, now by the way, we've been short bonds for a while. No surprise, we've been short bonds for a while. Now this was that big move that we saw in one candlestick. Now mind you, our trend is down. So any supply entry is just that. It's just a short entry opportunity. We did yesterday talk about, confirmation entry. We did yesterday talk about this area up here, in which we did get a retest back to that level before then price coming down to our opposing zone. Now, price broke right through those levels, those which would have been confirmation entries anyway. So I need to remove all of these. This was our breakdown trade. I'm going to remove all of these levels. So our breakdown trade worked out really well. Our retest back up to supply worked out really well. And so now on a 15-minute, I would say that if you wanted to get short below here, I think you got a decent opportunity. That's the price pattern that I like to see. So for day traders, I think that's a pretty good opportunity to get short below that level. It's not a typical three-touch breakout, but it is continuing with the bigger trend. And sometimes I'm going to take those kind of setups just to continue with the bigger trend. Okay? All right. Some weekly demand on TLT. Yeah, the bond sell-off is definitely extended. I mean, no question. I mean, that's the definition of extended, right? No doubt. All right, 30-year, very similar picture. I want to go over to Euro here real quick. And we were bullish the currencies yesterday. We were bullish all these currencies yesterday. And so no shocker when I go through these and pull out all these demand areas, because we were bullish the currencies on a potentially weak dollar. And so the announcement that we had strengthened the dollar, which made all of these currencies sell off. Even when I go to this page here, you'll see all of these currencies sold off and went through all of our demand levels. And so none of these demand areas held, not a single one, and it changes our entire dynamic. So I need to go through and reset my expectations based upon the potential for a stronger dollar. Okay? Everyone wants to rule the world. I love that. Good, Peter. Good catch. So when I go back and look, so trying to reset kind of our expectations on these, and I look at the 4-hour, well, we had that level up here, which I thought was actually going to be a pretty good entry. This little hidden pivot, which I need to remove that line there because we were in a strong uptrend and we blew through it. Well, now our 4-hour trend, if I take a look and I throw in my zigzag indicator, right? Now I'm just using the 4-hour trend. My zigzag indicator tells me you're probably still up. We switched to a little bit. The color would tell us that it's down, as I don't have a new swing as of yet. But what these colors do, by the way, is it changes color based upon what the computer determines is an uptrend or a downtrend. And so, and then yellow is undefined, green is up, red is down. So, but I'm looking for the swings, right? Swing high, swing low, swing high, swing low, and we're normalizing with swing highs and swing lows. So if that's the case, and this is our 4-hour trend, our 4-hour trend tells us, okay, we're probably still up, right? Probably still up. But if I have to think about it that hard, what's my trend direction, right? Sideways for the most part. Because technically, I mean, I do still have a little bit of an up here. But boy, am I not comfortable with it. I mean, I don't know about y'all, but I don't feel overly comfortable and overly anxious about getting bullish. And that's mostly due to the fact that we've seen that, once again, that rally up in the dollar. So I will tell you today, when it comes to currencies, I'm sitting on my hands. I'd love to, I can go through all the different ones that we have here and talk about each different level. But in reality, in currencies today, I'm going to be sitting on my hands because I believe that we're overextended, and I think that we may get a pop. unfortunately, I don't have a lot of great levels to lean on in any of these. This supply area here came right up, just barely missed the short, by the way, and or the stop out here, and then moved down for a pretty nice profit. And the Japanese yen, but I don't really have any great levels, right? I mean, I don't know what you guys think. Are there any supply levels or demand levels, for that matter, in any of these currencies that you think are strong enough that we need to be jumping in with both feet? I think that the Australian dollar gives me a decent one here off of this big move. I think the Aussie's probably the best one as I kind of look at that. But the Aussie, when I look at the Japanese yen, we had some decent levels yesterday. I don't have a lot of decent things today. The Great British Pound, this level here is a retest of all this noise, and the New Zealand dollar, I got this area here, but I like it much more clean in the Aussie. So I feel like there's a lot of garbage out there, and I don't want to force a position and trade because I think I should, right? I'm never going to be that guy. It's never my thing. And so I think that there's opportunities in the bonds. I think there's opportunities in the bonds on that breakdown. I think that's probably the best opportunity out there for the bonds. But from a currency perspective, I just don't see a whole lot that's sticking out there. So, all right, everybody. Well, that's all I have for today. Now, remember, I will, and I meant to put it out yesterday, and frankly, with the market, going bat crap crazy, I didn't get a chance to do so. I will be later today putting out a post showing everybody about the Trader Summit. So once again, if you've not already registered, please go register for the Trader Summit, tradersarmy.com/Trader Summit. When I put that post out, if you guys would please retweet or reshare or repost, I'm going to put it out on Twitter and Facebook and Insta, Snapgram, Chat, Live, Talk, Tick, whatever. If you would forward that out, I would be amazed. I'd really appreciate it. And also, some of you guys are part of other trading groups, maybe on a WhatsApp group or a Discord group or you're part of another academy. Share it there. Once again, not a sales pitch. It's going to be just educational. So I hope that you guys come. So, all right, everybody. Well, until Sunday night for our live trade room, I'll see you then. Have a great evening. Talk to you soon.